Welcome to Mex Moves, our weekly podcast on Mexico business and finance, produced by White Paper Media. Hello, Eduardo.
How are you, Damien? Doing well. How about you?
Me too. A little bit concerned about the tariffs that have just been put on Mexico.
Who isn't?
Exports to the US. We're recording this on Wednesday, the day after that announcement. Also hopeful that a deal will be struck when President Sheinbaum speaks to Trump, meant to be tomorrow, I think. So today we're going to talk about VC, the state of the venture capital industry in Mexico. We have with us in the studio Federico Antoni, and we're going to shortly be talking to him. And then we'll chat a little bit about the tariffs and how we think that's going to unfold. So VC, it's a difficult time for the VC industry in Mexico. The industry hasn't had that many big successes.
Correct.
Obviously, Corner Shop was a big success, which High Ventures did. Luna or Z Brands was also a success. Nazca was able to get out of Kavak with a very good return, but on a very small fund. But overall, so far, the returns have been modest. And as a result of that, and as a result of their own conservatism, the authorities haven't been willing to give them a lot of money. And unfortunately, when they did raise a lot of money, in the kind of boom period of 2020, 2021, 2022, valuations were quite high, and a lot of those investments aren't panning out. So it might take a little bit of time before we see investments made in that period generate attractive returns for the funds, because as often happens when it's difficult to raise money, a decade ago, you get very good returns on quite small funds. When it's easy to raise money and you have quite big funds, returns are often lower as valuations, for the same reason, are much higher.
It's an industry that's come a long way, I would say, despite all the problems that it's facing. I had the opportunity when I was still at Sentido Común, Damien, my own little news company, to talk to Nafin a lot about creating the ecosystem that wasn't even there back then. And it's come a long way, but like you said, it probably peaked in 2021, when they raised a lot of capital, probably displayed it at a high valuation, and it will be hard for them to show the results that the investors need to regain their trust. But I'm happy to say that it's an industry now, when if we go back 10 years ago, there was very little there. So, and there have been some companies that have reached unicorn status, maybe not any longer, because of the way things panned out over the past 4 or 5 years. But we'll have to wait and see what the next wave comes. And I think Federico is the right person to give us some insight into what the future holds, if I may say so.
Yeah, I think there's a lot of good VC funds out there. And I've said there's probably, at this point, 8 or 9 highly competitive VC funds in Mexico. You obviously have High Ventures, which is going to speak, but you have Cometa, that's had a great investment with Bitso, which is one of the big successes. Nazca, which did very well with Kavak, and Z Brands, Luna. You have Ignea, that's done very well with Rapid, and has still got firepower in their latest fund. De La Capa has made some great investments in Encode, and Bridge Latam, which is an interesting fund that's smaller than the others and newer, is a sort of founders fund. So you have some of the founders of Bitso itself, Kavak, in that fund, and Luis Enriquez helps run it from Cultura Colectiva, which was at its time a big early sort of success in the startup world. So I think it's a very vibrant sector. It's brought some great companies to Mexico that might not have existed otherwise.
That's right.
And they act as a kind of feeder to the big global funds that tend to come in later stages that give the capital necessary. I think what we will need to see are some exits, some big exits.
We haven't had really one that has highlighted the industry as it should have.
Well, we had Corner Shop, obviously, and Luna was a kind of an LBO, but very successful too.
But not an IPO or any of that sort, no?
Yeah, so Luna was both Glisco and Nazca, and that was, they got a loan from HSBC by their own cash flow to buy out the funds, and that they got very good returns there. So I think there are different models to get your exit. There's the IPO model, there's a strategic buying you, and then of course there's an LBO if you have great margins and great cash flow. I think in the end the investors are indifferent as long as they get their money back, but
They don't mind the way you do it, as long as they can get it back.
But I think you're right. The public markets in Mexico are obviously challenged, and there've been very few IPOs over the last 5 years in Mexico. And so one of the kind of traditional exits that you see in the US or even in Brazil, hasn't happened in Mexico. There's not a single tech company in Mexico that's IPO that I can think of. In fact, interestingly, the most successful by a long way private equity investment in Mexico has been Tiendas 3B, which was founded 20 years ago. So not technically a startup, but that generated very good returns for the original investors, French family office, and that is a retailer, obviously a hard discounting retailer with almost no tech element to it, but managed to find a very attractive business model for the middle and lower middle class, Mexicans that want, very high quality products at low prices, and they found it there. So that's been a big success, but none of the Mexican PE funds or VC funds were invested there. So now we'll hand over to Federico. Federico, as many of you will know, is the founding partner, CEO of High VC, a top VC fund here in Mexico, previously known as OVP. High VC has invested in some of the most iconic startups in Mexico and in Latin America. So, Federico, thank you, first of all, for joining us.
Thank you. It's a pleasure to be here.
So tell us a bit how you're seeing the VC environment in Mexico in 2025.
I'm very optimistic. We've had a couple of rough years coming out of 2021 where the ecosystem received a record amount of capital. So that year, if you see all Latin America, $20 billion were invested in the region in venture capital alone. And there was a big correction after that. And our industry went through the process of correcting what happened in the bubble. So there was too much capital invested into a few startups that grew too fast, spent too much, and did not focus on the business fundamentals. So we had a period that was tough from 2022 to 2024. It was hard for startups. It was hard for VCs. But today, we are a much more mature industry. We still have great density and dynamism. We have in Mexico a great group of VCs that collaborate and compete. We are at the beginning of a major technology shift, and your auditors know what it is. It's the impact of AI in the human life, in the way we do business, in the way we consume media, in the way we do everything. So that opportunity alone is one that I think will be great for the local VC industry. So this wave reached the Mexican VC industry in a great place because we've seen the tough years, tough beginnings of a lot of scarcity in terms of talent and capital. Then we saw what happened with too much capital. We had the talent develop in those years. And today we're, I think, a good group of VCs that can support entrepreneurs in their quest of building great AI companies. And that should in turn convert to returns for investors. So I'm pretty optimistic.
So two related questions, Federico.
Yeah.
One, I think yesterday or the day before yesterday, you had a post saying if you want to be successful in VC, you have to be in San Francisco. And you're obviously in Mexico. So the first question is...
what a contradiction.
What? I'm sure I'm not the first person to point that out. Why should I give money to a Mexico-based or primarily Mexico-based VC if the place to be is San Francisco? And the second related question is, how is a Mexico startup going to compete in AI, for example, with a global player that can amortize the technology cost over 30 or 40 big markets? And here we can do it over, 1 or 2 or 3.
Right. So let me tackle the first question. Mexican VCs have shown that we are the best at identifying talent early. So when you think of the most emblematic companies from Mexico or in the region, Bitso, for example, which is a great company, was discovered by Cometa. Kavak was discovered by Nazca. Payclip was discovered by Angel Ventures. Corner Shop was discovered by us, by High Ventures. Later, you had QED join, you had Sequoia, Axel, and the rest join. But you had to have that first check. You have to have that first group that believed in Carlos and in Daniel and in Oscar. And those people are the ones that are deploying capital here. So at the early stages, when the most important thing is finding the right team, is finding the conviction to back a vision that is just starting, I think Mexican VCs have proved that we're the best at that. So obviously the headlines are stolen by the major VCs based in Uruguay or Brazil or the Bay Area, but we were the ones that discovered those entrepreneurs. And even if we have to be very realistic about the impact a VC has in the building of a company, which is marginal, at the start, the points where those companies were on the brink of bankruptcy, at the start when they had to partner with a big bank, to partner with a big retailer, to engage the regulator with nothing, VCs were there. So all these names were a critical part of the starting point of those companies. So that's the first thing. Mexican VCs have proved that we are great at finding the best that come from Latin America and that we can deliver real returns based on that. The second fact is obviously related. Well, the world now is more global. You have more competitors investing very early. The place to be is San Francisco, absolutely. If you're building with AI, it's absolutely the place to be. But I believe, I am convinced that the best people to find the great Latin America talent that will build the next emblematic companies are Jimena of High Ventures, Christine of Ignia, Pato of Bridge Latam, Maria of Nido. Those are the folks that we will find the next emblematic Latin American companies at the early stage. Later, it's another story. That's for your first question. For your second question, if the best place to build AI startups is San Francisco right now, or the Bay Area in general, what's the role of a VC based in Monterrey or in Mexico, right?
Startup.
Right. Our role is to identify people very early before they move to San Francisco, because they need the collaboration between a Colombian VC and a Mexican entrepreneur in the Bay Area is still better than the collaboration between a VC in the Bay Area that is focused on Bay Area startups, that speaks another language, that has another culture. It's different. So the collaboration and this relationship of us as coaches, as partners, as the first call at midnight in the weekends, I think that collaboration is still better with a VC that understands you, speaks your language, understands where you're coming. So that's one thing. The other thing is that in the AI age, it is not only as important to understand the problem you're trying to solve, it's even more important because there's more competition. So you compete almost as much in your understanding of the problem as you compete in the execution of a technology that will solve that problem. And when ChatGPT launched in November 2022, when a few weeks later it gave access to its API, the CTO of Cloud, a great Mexican PropTech, and the CTO of Zillow, the amazing American PropTech, had access to that API at the same time, started thinking about the possibilities at the same time. So someone like Andrea in Cancun building Yana has a level playing field. That is amazing. That's the first time that's happened in Latin America. So you still have to compete. You still have to bridge some difficult gaps. You still have to convince the VC that from Latin America you can build global and emblematic companies. You still have to do that. But the level playing field is just super exciting right now. Super exciting.
It's great to hear you, Federico, in times of great distress, to have so much optimism and confidence, to be honest. I haven't heard that in a long time. Very happy to hear that. So you see a lot of talent in Mexico that will take advantage of AI like probably nowhere else, or at the same level as some other places. And that's the solid foundation of your optimism?
Of course. So the talent is everything and has always been everything in our line of business. I would argue now it is much more important. And talent is equally distributed around the world. And since today we can reimagine almost everything, it will be reimagined from people that are from India or from Nigeria or Turkey or Mexico or wherever else. And today, the world is very global. It is operated remotely. And of course, we have a great talent and a great imagination. Think about, for instance, you are very cultivated interviewers. So think about literature. Can someone argue that you wouldn't find great poetry because they're in a third world country or that would be impossible. But still, Garcia Marquez, if he hadn't been born in Colombia, wouldn't have imagined the worlds he imagined. And it's a little bit similar. And if you push that metaphor further and you think about Florence in the Renaissance. Florence in the Renaissance had the wealth, the dynamism, the competition, the patrons that would finance the greatest minds in Europe. And people moved to Florence. But they moved from all over Europe and all over Italy. And I think that will happen. And the case of moving to San Francisco is exactly that. It doesn't mean that you have to forget about the origins or forget about your background or forget about how you understand problems. It means being there is special. It's not an obligation. Companies will be built from all over. But being in San Francisco right now certainly feels like being in Florence during the Renaissance.
Because I have, as you know, an investor relations consulting firm. And I see American companies, European companies that offer the same kind of product, rolling out investor relation chatbots. And the development costs, they can spread around 3,000 clients, multiple markets. It's very difficult, based here in Mexico, to be able to amortize those development costs over that kind of client base. And therefore, it's possible, I hope it doesn't happen, the big global AI companies will eat our lunch because we don't have to scale to take them on. And we don't have the initial revenues, the initial client base to be able to fight them on a fair basis. And so that's the concern I have, is we've seen it in media in Mexico. Little by little, Google, Meta, TikTok have taken the advertising market away from Televisa, away from Azteca, or even away from Reforma. The lion's share of the advertising pie is now going to global companies that are not headquartered in Mexico, and that's kind of decimated the media industry to a large extent. And we've seen Televisa stock prices below $2. It used to be at $40. So my concern is that and that may explain partly why NASDAQ and S&P 500 have done so well, whereas emerging market stock markets, especially Mexico's, is that the more and more of the profits that are being generated and more of the GDP that's being generated around the world are going to go to these big techs and leave the countries like Mexico far behind. I see that at a very personal level because I see it happening in my own industry right now with AI.
I think it's a great example. The market dynamics and the evolution of the internet, first with Google and search, and then with Facebook and social media, were such that the biggest companies have the biggest share and the biggest companies are global because of the nature of the internet. So what you're mentioning happened in Mexico, happened in France as well, happened all over the world. So it's not a Mexican phenomenon. It's not because we Mexicans are lazy or have no imagination. It's just the nature of how the industry evolved. Today, it is a safe bet to think that the foundational models will coalesce to 1, 2, 5 players around the world. The majority will be US-based. A couple will come from China, and hopefully France will surprise everyone
with 1, 2.
And that will frankly look a little bit like the search era, and the race toward finding and financing and spotting the next Google is on, and it's fascinating to watch. That is not the only race. That is not the only opportunity. Thankfully, the other opportunity, and let me take your example and push it further. Do I think that in London, in Hong Kong, or in New York, there's other Damians? Of course there are. Do I think that Damien from Mexico City, the Englishman that moved here, pursue a journalist career, and then moved to UBS and then launched its own gig, do I think Damien can be the winner of that race? Absolutely. Absolutely. It's not about money. It's not about money. Of course, you need a little bit of money, but Damien could build the best investor relations AI application around the world from Mexico, financed by Mexican VCs and then American VCs. Absolutely, Damien. That's absolutely the case. And by the way, if you do start a company and you do start something that has those global ambitions and you want to become a tech entrepreneur, an AI entrepreneur, we would gladly gladly analyze the possibility of backing you.
Well, be careful what you say.
Because there's another feature of our work in this very, very exciting and uncertain times. I don't ignore the uncertain times. I just think that there's enough out there to talk, think, consume about the uncertain times than me talking about that. But what is really exciting about our work today is that it's back to the essence. It's become hard again to spot the right teams. In the 2018, 19, 20 era, you just had to understand the pretty basic pattern recognition of SoftBank and basically finance teams that fit SoftBank or Tiger or Sequoia's pattern and hope you're lucky and they take it and they put in several hundred billions of dollars. That was the work. And it wasn't fun, frankly. We felt very important because we could speak about hundreds of millions of dollars and billions of dollars of valuation and could count unicorns in two hands, not only one hand. But those were not the good times we're seeing now. Today, early stage VC is hard again. So you have to go and find the interesting teams, the ones that will imagine something completely new. And your typical pattern recognition of backing an ex-Rappi or ex-Uber or ex-Nubank with great US credentials, that's not the game anymore. So now the sweet spot in our work, I believe, is now much bigger. It's not only those teams, now it's much bigger. Now we can finance Damien, who's in his fifth decade, I think, sixth decade. We can finance Damien, who can build and has everything to build the next global investor relations AI application. Or we can find a 19-year-old that didn't get a formal graduate education or undergraduate education that will work 7 days a week, 15 hours a day to reimagine an industry, to reimagine an application. So now it's more interesting because we not only finance this 30 to 40-year-old ex-Rappi, ex-Uber, ex-Nubank that went to Harvard or to NYU or to Stanford. That wasn't very interesting. All male, all from Mexico City or Monterrey. That was boring. Now it's exciting. And now our work has more value because, and I finish with this, spotting the Damians and spotting the Andreas is much harder. It requires a lot of conviction. It's not only about your guesswork on the pattern recognition of the follow-on investors or the growth investors. It's about finding true talent and finding true conviction.
Just one last question before. Federico, so you're telling us that your advice to talent today would be, don't think local. You're global. I mean, Damien should not be thinking about Miranda Partner, Mexico City.
Oh, of course not. Of course not. So it really depends on the area of focus. If you're trying to solve a problem in financial industries, there are borders related to the regulatory framework. There are still borders
that impede that.
Exactly.
Factor.
But if you're going to build the investor relations co-pilot for the future, you should think globally because there are no borders. We can and we will adopt the best investor relations co-pilot out there if we don't build it internally. And it doesn't matter if it comes from Hong Kong, Mexico, or
Spanish, French, whatever language as well.
Language,
it doesn't matter anymore.
There are no language barriers anymore. Yeah. So it depends on the business. If you're building something that doesn't have those very local or regional characteristics, you should think globally. And if you think globally and you're building an AI startup, it is advisable that you spend a lot of time in the Bay Area, if not all your time.
So there's a paradox, Federico, that the best time to invest in startups is often the most difficult time to raise money for a VC fund.
Yes. And that's always true.
And that's always true also in public markets that I've noticed.
Yes.
So right now, in terms of fundraising, how would you describe the environment and what does one need to do? What do the authorities need to do or the authorities need to do, make it easier for VC funds to raise money and invest in these opportunities?
That's a great question. The short answer is it is very, very tough to raise capital for venture capital firms outside of the US and outside of the large multi-stage firms. So LP money has gone to the largest, safest bets possible. and the largest funds have had no trouble raising capital. On the opposite, everyone else has had trouble, and moreover, Latin American funds and Mexican funds. The support of the Afores directly since 2018 and indirectly since 2014 through funds such as PineBridge and Northgate has been critical for the development of the Mexican industry. We have a healthy, dynamic, interesting industry because Afores had the vision of betting on us. We need to deliver. We need to deliver it collectively.
As an industry.
As an industry. We need to have not only a great fund or a couple of great funds, we need to deliver in order for them to be convinced that it should be an asset class to support. Because the Afores now can invest in the best VCs in the world, no matter where they are. They need conviction to back our vision, and we need to deliver results. We need to do that. So I really don't think there's something that the government can do besides what governments can always do for business, which is get out of the way. It's not a matter of lobbying for whatever tax exemption. It's not a matter of lobbying for the regulator, the antitrust regulator, to be faster, more flexible, more reasonable. Of course, that's important, and on the margin, we should keep working at it. It's not a matter of having public markets that one day become super dynamic and open for IPOs, tech IPOs in Mexico. Of course, we should strive for that. And we're lucky to have leaders such as you, Damian, and Maria leading the way, Maria Arisa leading the way in that sense. But what we need is to find the teams that build extraordinary companies. And that we have. So we need to have, as an industry, a reasonable amount of capital to operate. So we need to have the Fund 2s and the Fund 3s and the Fund 4 of the great VCs here in Mexico. We need to have capital to deploy. We need to be able to participate in this amazing and fascinating wave that is happening right now. But we don't need huge amounts of capital. We just need a few funds that can support companies from seed to A. We need a few funds to be able to support companies from start at the pre-seed to the seed level. That is all we need. The growth capital will come from abroad.
So do you think that, given that the returns have not been very good so far, and I know it's still early days, the first cohort of VC money was a little more than a decade ago.
Yeah.
Given that the Afores are very large now, and so VC money, because it's by nature quite small, doesn't really move the needle for them.
Not at all.
And it's quite a lot of hassle. It's quite a lot of exposure. Companies, by their nature, go bust in VC, which looks embarrassing, even if it's a tiny amount of money from the perspective of their total assets. Do you think the Afores really aren't the right vehicle? And in addition to that, the typical Afore manager doesn't really have a very large bonus compared to Wall Street or the Bay Area. Should we not just focus on family offices, global funds, development banks, in Europe that right. invest in VCs? Should we just give up on the Afores?
Of course not. And let me push back on your first statement. We have delivered results. This year, we'll conclude the process or the life cycle of our Fund 2. Our Fund 2 has delivered north of 4x DPI, so money sent to the bank of our fund of funds and then sent to the Afores. We have delivered a little bit shy of 40% IRR in dollars, and that with a fund that has a vintage 2014. So it took us 11 years to deliver that, and those results are unquestionable. And we're not the only ones that have them. This is probably the best Mexican fund out there, but we're not the only ones that have return capital that have great potential. We still have to deliver results on the later vintages, 18, 17, 19, and we should be able to do that. That's important. So that's the first answer. The second is, of course, Afores need other things to deliver great returns to the Mexican workers, and they do a fantastic work at that. For them, VC is investing in the future of Mexico. The technologies the companies develop from here, are making Mexican corporates more productive, manufacturing better, exporting goods easier. They're making the lives of Mexicans better, and they understand that. And overall, we have a positive impact in the economy, and they understand that. So what is interesting today is that unlike the Europeans that get a huge share of their capital via government support, we need to demonstrate to the Afores that we're as good, adjusted for risk, as the Axels of the world, as the Andreessen Horowitz of the world, as the Sequoias of the world, as the General Atlantics of the world. So that's interesting. So that's why we are a very fit industry, because we have to prove ourselves. We have to deliver returns, to raise capital. And in VC, it's a business and it's a craft that takes decades to learn, and we're on the process of learning it.
What about any development banks in Mexico that they've gone out of the picture over the past few years? Would you like to see them come back?
Of course, the more capital, the better. The more the families invest their capital into VC, the better. The more international VCs we attract, or funds of funds we attract, the better. That's for sure. There is an institution that probably doesn't get the credit they deserve, which is Fondo de Fondos. Fondo de Fondos basically was at the origin of the private equity industry in Mexico. And they're a hugely important player in the development of the VC industry. They have backed us several times now, and they have done well. So it's been good for both of us. So Fondo de Fondos has been spectacular. Of course, the IFC, the IDB, the DCF, those institutions are also important. They've raised our game. They've allowed us to become more institutional besides the capital they bring in. But building a VC is about understanding where you deploy capital, how you construct a portfolio, how you support entrepreneurs. But it's also important to deliver the returns to your investor, to communicate well with the help of Damien, to engage, to build relationships, to deliver on their expectations beyond the returns. So we have to be good at both. When you look at a VC that's deploying capital here in Mexico, she has had to do very well the fundraising part, and she has had to do very well the deployment part. If you look at a hired gun from a multi-stage VC that's here because they need boots on the ground, the only thing they have to do is look at startups and deploy capital to startups with a hugely diversified portfolio. So our work is much harder.
Yeah.
Much harder. We need to work much harder.
At the same time, you will be measured against the big guys as well, the big guns.
But that means that we are fitter.
That's right. You're more agile, you're more flexible.
We understand the investor side as well as the entrepreneur side. We understand capital. And that understanding of capital, those relationships that we have built with very successful and amazing families around the region, that helps us help the founder. So it is a cycle where I'm very optimistic. There's a lot of hard work in front of us. We need to be lucky, as always, in venture capital. But I'm pretty confident that you'll hear great things from VCs in the future.
Welcome back.
We saw a last question, if I may, Federico.
Yes, of course.
We saw a very successful exit, Luna or Z-Brands, which I think was Glisco and Nazca. We also saw a spectacular failure, Gaia, recently. Would you expect any big exits this year? Any companies in your portfolio that you're close to that you would like to highlight as looking in a good position to return cash to original shareholders?
Right. So we've exited 3 to 5 companies every year recently. We just sold Nubity to Evertech, a public US company.
How did you do on that? I heard like 2-3x.
It depends on
when you entered.
When you entered. So there's always a mix, a range. So there are multiple tens for early investors, and then the later investors did reasonable. We have to do that work as well. Hopefully we'll find a lot of corner shops, but it's not only that, we also need Nubities. I think that the big question is the public markets in the US. Will they seek Latin American risk in tech? Will they look for the next Mercado Libre, which has been a spectacular public company? If you invested in Mercado Libre's IPO, I mean, you'd be 50, 100x. So it is really difficult to assess. So what's in our court is those companies are getting fitter. They're all profitable. They keep growing. So yeah, if we have a surprise, I would say it's in the crypto space. So maybe we'll see an exit in that space. So maybe the next one is not going to be an IPO, but M&A, old school M&A.
Coinbase buying Bitso,
Exactly. That is a pretty probable scenario. Without any information about Bitso or Coinbase. I'm just guessing.
Yeah, no, it's a logical inference, but it was also logical last year and the year before, and it didn't happen.
It's different this year.
Yeah, Trump is obviously a big fan of crypto, and Bitso also is growing quite aggressively in stable coins and remittances, which is a business that Stripe has got into as well. So there's a kind of convergence between some of the more traditional fintechs and the crypto fintechs.
Absolutely. And as in AI, there is so Stripe is the big tech, right? Everybody's afraid of. And then you have the large tech local startup, which is Bitso. But there are also the local smaller startups that are betting on stablecoins, which are super interesting. So we have Shinkansen that is building infrastructure. You have companies like Felix that's working, combining stablecoins and AI. You have companies like Dollar App that are completely regional. So you will see stories, obviously, with Stripe. Obviously, you'll hear about Bitso more and more, but you'll also hear about the new startups. So this is super dynamic. We're back to the dynamism that we were excited about in the early days.
Brilliant, Federico. That was incredibly interesting. Thank you very much for your time. Look forward to High Ventures investing in Miranda's AI app.
Of course. Let's chat. Of course. Thank you both. Very interesting.
Thank you, Federico. It was very interesting.
So, Eduardo, why don't we shift gears rather dramatically to tariffs? What do you make of yesterday's 25% announcement?
I thought that President Trump was not going to put tariffs. It surprises me that he's gone to the trouble of doing so. And I say trouble because this is not going to go well neither for him nor for Mexico. Obviously, Mexico and Canada have much more to lose than the U.S., but this is something that makes no sense. Like Prime Minister Trudeau said, the tariffs were announced, that it makes very little sense from a geopolitical economic strategy, but here we are. This is Trump reloaded, thinking, in my personal point of view, in a very old-fashioned way, that he wants to build a fortress when America has economically has done very well by partnering with Mexico and Canada. And now he's moving the needle backwards decades, and we'll see what happens. Yesterday, we saw some small lights at the end of the tunnel by Secretary Lutnick saying that there might be a deal. Sheinbaum, like you said, will speak with the president, with President Trump tomorrow, apparently in the morning. So there is some light at the end of the tunnel, maybe, I don't know. But it's quite damaging, obviously, for the Mexican economy, because 30% of our GDP is tied to exports. 80% of our exports go to America. How many jobs might we lose? How many growth points of GDP might we lose? We are already facing a huge slowdown. This will only make things worse. And the paradigm, I think, is that this will probably make Mexicans more skeptical about the U.S. as a reliable partner. And that's, in my own personal point of view, not something that should happen, but it's happening.
I agree with that. I guess you could argue that from Trump's perspective, the threat of tariffs has worked in the sense that migration, undocumented migration, has fallen very dramatically, partly because Mexico's, concerned that if it wasn't going to do that, it was going to face tariffs. Fentanyl, drugs to the US has also gone down a lot. And obviously, last week, they sent 29 narco leaders led by Caro Quintero to the United States, which they probably wouldn't have done had it not been for the tariff. So he has extracted some concessions. I think having said he was going to do it in February and then put it on hold for a month, if he'd simply put it on hold again, from his perspective, he might have felt that he would have lost face. So he puts these tariffs on, and then he has this call, which, when you're listening to this, will be yesterday, on Thursday with Sheinbaum, and maybe a deal will be struck. And he will say, look, I managed to achieve all these concessions. In addition to that, clearly what Trump wants is big multinational companies, like GM, like Ford, like Honda, to invest in the US. End of story. And this threat of tariffs on Mexico and on Canada, of course, kind of ends the illusion of frictionless North American trade. And what Trump is saying is, even if tariffs are eventually lifted or reduced, you should invest here if you want to be, quote unquote, tariff free. So from his perspective, it will shift investment flows away from Canada and Mexico and other countries to the US. There will be some costs, very significant costs. And of course, Mexico will bear the majority of the cost, although this will be very painful for the US as well. And I think the uncertainty as well about what will happen is putting everything on hold, both in the US, where the economy is also slowing down, and clearly in Mexico, where the latest GDP numbers and sales numbers are all quite disappointing. So it's bad news. I sort of think it's important to understand why Trump is doing it from his very sort of transactional way of carrying out politics. He might think, as he said last night in Congress, that it kind of makes sense. I think from a long-term, medium-term point of view, it makes absolutely no sense at all. Be damaging to the US and the Mexican economy.
I will push back a little bit on the fact that, yes, he's accomplishing two things, migration and drugs. Did he need it, the threat of tariffs? I mean, these are two very different topics. I don't like mixing apples and oranges, but I'm not the president of the U.S. And I think he had other leverages to do what he did and what he accomplished. Mexico had already stopped migrants during the last year of the Biden administration without any threat of tariffs. The drugs, I mean, that's a very complex issue that needs to be addressed. And that's, if you ask me, that's one beneficial thing that we're seeing as a country where the government is no longer hogging criminals. Not that they were hogging them before, but that they were a little bit more lenient. I like that. I think that's good for Mexico. Most Mexicans would like to live in peace, I would say. But my wonder is, was this needed? And I see his logic. I don't like his logic, but who am I? And I think he damages the long term more than benefits. We are a region. We do things together better than if we do it separately. I know that he wants manufacturers to go back to the States. It's more costly to do so. Maybe some parts should be done in Mexico. You want to compete against other regions. That's the way you were doing it, and it was working. Why fix something that it wasn't broken? What was broken was not attending those that had been displaced by free trade in America. But that's a different total issue. That's a policy issue where the U.S. could have done much more by helping those that are suffering from displacement. And they haven't done much without it for those Americans that are suffering. So I think it's a misguided way of running a country.
For sure. I mean, I think what Trump misunderstands is that Canada, US, and Mexico have developed a co-production economic model where cars are partly made in the US, partly in Mexico, partly in Canada, assembled in one of the three countries and delivered to the end consumer. So putting tariffs between that co-production model basically completely undermines it and hurts all three countries and companies in all three places. And Mexico, unlike China or unlike Vietnam, because of this co-production model, has a huge American input into every export that it makes. So by hindering Mexican exports to the US, you're also hurting US exports to Mexico. And even talking about exports and imports within a free trade zone makes little sense when you have this co-production model that's been in place. And it's not something you can turn off, and it's not something you would want to turn off. I think because of the reality of that, and because of the pressure from the stock markets, pressure from the corporate CEOs that have access to Trump, you'll eventually see, hopefully sooner rather than later, those tariffs being removed or substantially reduced.
I hope so too. I think that's the right thing to do, to be honest.
Great. Well,
thank you, everyone, for listening to us. Damien, thank you for hosting the podcast again, and we'll hope to see everyone again.
And don't forget to subscribe on Spotify to the podcast.
Or wherever you listen to it, and don't forget to click on the bell to get notifications of our next podcast. Thank you, everyone.